Right, welcome everybody. It is Sunday evening, so my goal, obviously, on a Sunday evening is to break down, well, what are the potential things to have a look at. What I used to do, I used to try and predict what I think's gonna happen. I might have a little, dabble with the dollar outlook, but I think that it's pretty tricky at the moment, in regards to obviously all this escalation because it can change at any time. So that's obviously one thing that we need to be aware of. But obviously, what I'll do, I'll go through everything, make sure you guys understand obviously what to look out for and why. And then yeah, you can ask me as many questions as you want at the end. That's not a problem at all. So right, let's get started here. First things first, the reason obviously why I don't like to predict anything, I obviously don't trade on a Sunday evening either. I think it's such a big advantage to let Sunday Asia play out and then, attack what your expectation is. So that's always my plan. I like to, make sure that I understand, what has happened. I'd like to obviously, start the week a little bit more chilled out. And of course, then we can, look to yeah, capitalize as much as possible. But I think, every trader, it's their downfall to try and rush in, and obviously I've been there, I've been doing this for over 12 years now, in the fact that you obviously it's the worst feeling ever to start off the week badly, especially if you rush in on a Sunday evening. So I like to try and make sure that I chill out, and I'd like to try and make sure that I yeah, I start the week strong. All right, so this is, my obviously journal and the account that I'm journaling here. We've been having a really, really good July, so we haven't come close to an all green month for a while. And lots of this is, because of the lower time frame gold trades. We obviously had a couple. December was close. October was close, so I'm expecting us to throw in obviously one or two losing days because it's been quite tricky. But obviously, yeah, it's been going really, really well. So I'm, super happy. So that's the plan here is to, make sure that we can, yeah, we can obviously capitalize as much as we can. So looking at obviously what happened, in regards to the dollar index, last week, this doesn't really tell us a lot. We obviously tried to push up, rejected, tried to push back down, rejected that too. So doesn't really tell us, a hell of a lot. Yields were exactly the same. One of the things that I marked up ages ago was it's kind of traffic light for I did it for oil and I did it for yields too. And obviously, what's ended up happening, as soon as we've had a bit of escalation, yields, start to creep up. Now, one thing that I want to explain, and it's too obviously in relation to gold, all right, because everyone gets gold wrong. All right, so you've got obviously, let me write this out and then it might help everybody. So you've got escalation. Oh, just let this person in just as I'm typing. Right, escalation. Probably spelled it wrong, but who cares? Right, and then we've got de-escalation. De-escalation. Yeah. All right. So those are obviously our two, two uh, scenarios here. All right. So, yes, escalation, and we're going to call this, bullish for gold. And then we'll obviously call this, so we'll put it BU and then we'll pull bear, we'll put BE. Yeah. All right. Basically, the down, up. Yeah. All right. So, escalation should be good for gold. Yeah. All right. But one thing that we've got to remember about escalation, all right, in this particular war is what it is driving up. All right. And obviously, the only thing about which, if we look at oil on a weekly, it's a bit scary. It is starting to creep up. All right. Now, with oil prices high, all right, what is the danger? All right. Does anyone, know? Put it in the chat. What is the danger of escalation and, in regards to oil prices? Greg's got it, inflation. Yeah. So, if oil goes up, all right, let me just get rid of this. So if oil, right, goes up, right, that's also going to mean that yields go up too. Yeah. All right. So if we've got oil up, yields up, that means there is inflation worries. Now, these trading higher, send gold to the down side. Yeah. All right. So that is the worry here. However, if we have escalation, the Strait of Hormuz, stays open. Remember, Iran has 20% of the world's oil supply, so as long as that's coming through, then, and there's, shipping coming through, then we're obviously not going to have this be hit as hard. I personally think that is coming where the strait is gonna close. Okay, so those are the things to kind of worry about for anyone who's trading gold. All right, you have to understand that you've got to be looking at US 10. Why? Because obviously these are government bonds. It's the big, big money coming in, and big money comes in through good data and through bad data. All right, because but basically, anyone who's smart wants to park their money in the right place. Yeah. All right. So naturally, if oil's going up, they obviously know instinctively what is oil priced in dollars. Yeah. All right. So naturally, if oil goes up, the dollar will go up, yields will go up, because but it's going up for bad reasons, right? It's more expensive, but it's just obviously the best place for, the big guys to obviously park their, money while this war is happening, and it's a better buy than what they would normally do, which would be to buy gold. Yeah. All right. So the only kind of weekly that is quite interesting is oil. That is one big push up, on a weekly time frame here, even daily. We started this off Monday, nice jump, consolidated Tuesday, Wednesday, Thursday, then pumped up again on Friday. Yeah. All right. So, I am probably because, there's been, bombings happen all weekend, but nothing's been on the Strait of Hormuz yet, So that's obviously what's stopping this drive. Now, if that happens, yes, expect, oil potentially to be back up at this 100. Um, so that's obviously one thing that we need to be aware of, and also expect yields to be trading back up at these highs. Yeah. All right. So, these are obviously all things to be a tiny bit, um, you know, not worried about, just being aware of what is happening. Now, interestingly enough, we don't have much US dollar news this week. We've obviously got some Chinese data. I don't particularly trade CAD, but obviously we've got inflation data for CAD. Now, what's been interesting this month or last couple of weeks is, remember when the war escalated? It was July, and the data that we're getting through, now is for June. All right. So yeah, everything was under control. It was under control for a while. Everything was getting back to normal, and so we can, kind of expect, yeah, d data to be pretty good. But obviously, we're waiting on some, speeches and some outlooks, some outcomes, because, even though the data's good for June, we've obviously gone back into high escalation mode in July. So expect July data to be completely different to June. So that's why it's been almost been taken with a bit of a pinch of, salt. So, but anyway, for obviously what we trade, Monday pretty quiet. We've obviously got a holiday in Japan. Tuesday, we've obviously got employment. Remember, we've obviously had, other countries' employment rates have been dropping, so expect potentially UK's to come in about 4.8. We then got obviously some employment for the US on Tuesday at 1:15. We've obviously then got inflation data for the UK. So this week's going to be heavy on UK, Euro, and Aussie, and then mix in a bit of US dollar too. So got obviously inflation data for the UK. And remember, everything works in a chain. All right. So the US has had good data. I think Europe's had good data. So I'm expecting UK's, inflation data like what's projected here. I'm expecting it to cool for June. But obviously, we can could potentially see a bit of an increase. We've obviously got employment data for Aussie, so we'll be looking at that for when we wake up on Friday, and obviously, sorry, Thursday, and we've obviously got interest rate decision. I'm expecting them obviously to hold, but obviously we're gonna have to wait and see. Next bit of US news, jobless claims, and continuing jobless claims, and then Friday we have got core retail sales for the UK, more inflation data for Europe and the UK, which is PMI. Um, and then we've got, yeah, some inflation data a bit later on, actually, on Friday for the US, So pretty kind of heavy week on pound and euro, but the US dollar is going to tend to kind of kick in Thursday and Friday. So that means what we are running on Monday, Tuesday, Wednesday is just pure hype. Hype and expectation, which isn't the nicest to be trading in. So yeah, but like I've said, looking at everything here, right? If we were analyzing this to take a swing trade, all right, you've obviously got dollar in a nice bullish trend here. You've got yields holding at these highs. All right, we've then got dollar here kind of holding, but not really doing very much at all. It's kind of waiting for, something to happen. And I think if I was gonna hazard which way we're gonna go, then I'm always gonna look at obviously oil and look at yields, and I'm gonna always angle towards probably a higher probability we're gonna push to the upside here as opposed to drop to this down side here. So from like a shorter time frame here. Where would I like for the dollar to be opening here during London? Yes, because I'll be buying it from here. But what I want to see is it drop down, hold. So that would be my like A star kind of scenario coming into tomorrow. But to be honest, anywhere here, as long as it's holding and it's not, dropping and it's not broken through, I'll be pretty happy. So yeah, let's wait and see how that opens. These were obviously our trades from Friday, pretty slow. But so Shonup obviously held these right the way to the end. We obviously had two triggers on Aussie. Aussie on a intraday time frame. It's a bit of a tricky one here because daily, you could argue we've kind of broken out, kind of trading in a zone here, struggling to break through. We've got a massive key level here as well, which it tried to break through, but it's struggled. So we could see a potential, downward kind of move here. We got a couple of areas of targeting overall. One would be here, and then the other one would be here. And obviously, if these break, then potentially could be looking to drop down into this area here. All right, so we've obviously got a couple of areas here to obviously look out for. GBPUSD was a bit slow as well. Triggered two, dropped down in. So come out of that one about break even two was never really in any danger. So but obviously that again pretty similar. I'd like it to be. Well, that's a bit of a messy one. If we're looking this from a technical outlook here, we've technically broken through. We do have obviously heavy. It's going to take a lot to break through here. So and obviously downward target would be this one here. And then obviously followed by these lows here also. So let's wait and see. This would be putting me off kind of trading this. I'd probably want it to break through this area before even working out what we're trying to do. And at the same time, if we're looking to buy the dollar against the pound there, then yeah, we want it to kind of exhaust itself a bit during Asia. I've got a funny feeling we're going to do the opposite. We're going to gap open, slightly, potentially push down here, and then sting up. So do something like this. That's what I'm expecting, potentially. But obviously, we'll wait and see. Euro. Let's just have a quick look at this one. Again, not obviously not too bad. Our trigger was up here. So we'll be triggered. But as you can see, the last kind of 6 hours, Euro USD did absolutely nothing. So you know kind of a slightly different scenario here if we're looking at this from a technical point of view in regards to obviously euro, we're obviously, there's a lot of resistance here. So potentially it's going to struggle to break through here. But obviously, we've also got a lot of support here too, so we really want to wait for obviously Asia to open up. USD JPY, I don't like where it is. It's obviously, in proper intervention, territory. If I look at this on a monthly, we haven't been here since 1986. All right. So a long time ago. So 40 years ago. All right. That's when USD JPY was at this price. All right, so we've breached these highs. We've obviously still got a very strong um, US dollar. We've still got obviously in regards to yen. You want to obviously keep an eye on yields. Basically, to obviously because Japan import, so much. All right, majority of everything that they don't export much. They don't generate much. They're very big importers. So what they normally do, they heavily buy US 10-year yields or government bonds because it really helps Japan, the Japanese yen, to obviously offset their currency. Especially at times like this where it's very weak, but it is getting out of control. I would say the danger zone for me is probably, 162,500 to 163,500. I'll be surprised if we break through here. So, we do really need to, kind of be careful if you're trying to trade. If you're trying to trade this to the upside. And to be honest, if you're trying to trade any yen packs, they do tend to, USD JPY is almost the main indicator for, yen. And obviously, if that's down, it tends to drag everything else down with it. But I don't think they're quite ready yet. There's no point them intervening early because it's just going to come straight back up. So I'm expecting, yeah, for probably a couple more weeks, they're going to obviously want this war to to be over. If anyone wants like a medium risk, swing trade, anything above 162,500, start to be adding in positions looking to, sell because it will happen. And obviously, I think we'll probably drop down to about 160, which will be a nice, nice 500 trade. If we look at the last time we obviously had it, it was yeah, 500 pip trade, So if we're obviously trading around this 162, yeah, well, potentially might be a bit more, but that is obviously one thing that I would be, looking to yeah, to try and capitalize on as much as we can if you want to. And last but not the least, gold is tricky. All right, if we're looking at gold on a weekly, it's not looking very healthy at all. It was trying to a couple of weeks back, trying to show some, some strength here. However, weekly wise, let's just draw a line through here because it's gonna represent. This is holding up really well. So if we call it 38, probably 90. 3890 is holding up really well, or 3990. So that's one thing to be aware of, but you can't be openly looking to buy this on a long-term view. At the moment, I would say if you're looking to buy, then we're gonna want to be clearing. I'm going to draw it as an area, but you're going to want to be clearing this area here. All right, that's probably what I would be looking if anyone's looking long term into gold, then we're going to want to be looking at that area. But I actually think potentially if this breaks, it'll be worrying to see obviously where we might potentially go to, because it's a long way down. Support wise. So yeah, let's wait and see what happens here. But that's a bit of a breakdown, in regards to obviously the macros outlook. A bit of obviously technicals on the charts. What have I done here? Hold on a minute, guys. There we go. Right, so let me go through the chat. Um, Right, Greg, you made a comment a while back that even if you are not trading a dollar pair, the trade is based on a dollar. Can you explain? Yep, yeah, yeah, it's the whole market. So if you are trading, I'll do a proper video on this tomorrow. But if you're trading GBP JPY, yeah. All right. The price of GBP JPY is made up from GBP USD and USD JPY. All right. This is what no one understands. Right. The whole FX markets, revolves and is priced in around the US dollar. All right, but I'll do a proper video on it because it's a little bit complicated, but obviously there is a calculation that you can do where if you've got the price of GBP JPY is made up of the price of GBP USD and USD JPY. So yeah. So that's obviously one thing to kind of take into consideration. Let me just try and roughly do it. I cannot remember off the top of my head, but if I was to do 2.356, hold, bear with me, 1.344. Yes. So yeah. So if you, all right, and you can all do it. So GB, oh God, go away. There we go. GBP JPY, yeah, right. If you go USD JPY times, so multiply, all right. Interesting fact for everyone here. GBP USD, all right, equals GBP JPY. All right, and you can see here. All right, I have times 162,356 by 1.3448, and it comes out at 218.337. And obviously, what is GBP JPY? There we go, 218.3337. So it's pretty that's obviously how the US dollar is made up. Jonathan, hi Dan. Question: with the CPI and PPI lower than expected last week, does it mean the price of dollar? Um, does it mean the price of dollar going down for this week and into the following week? No, not at all. Because basically what everyone's going to be aware of, all right, is that is the June data, yeah, all right, but they've also had a war escalate early July, and obviously any war escalation increases inflation. All right, and obviously that's the only thing that obviously that's their whole job of anyone, Europe, UK, US, Japan, is to manage the country's inflation. All right, so I think yes, it's great, but obviously it's not true data, which obviously makes this month quite hard because you are looking at, last month's data, and you want to kind of, yeah, it's not as clear and as black and white as when it usually is because everything was calming in June. It was pretty chilled. And then obviously, as soon as July hits, it's, everything's escalating, So we do have to, there's, kind of like I always, say the drivers can come from good data and bad data. Yeah. All right. So we need to be, we need to, always need to be aware of, what's driving the bad data. And obviously, it's this huge war, which could kick off at any time. To be honest, I know that obviously politics has always been in trading, but for the whole time that I've been trading, I've never noticed it as much as obviously what I have this year, mainly because of Trump. He can speak about anything at any time. If he goes and puts a tweet out tomorrow that him and Iran have had great talks and everything's going to be cool, yes, the dollar will absolutely plummet. Yeah. But, on the flip side, if he then, posts a tweet that, yeah, I'm going to send troops into Iran and we're going to go hard, then, it's going to obviously flip the other way. So they're all things that we need to be careful of. Heard of a big whale sell on BTC? I think chart says similar thing, right? A big whale sell on BTC. Where are we here? I mean, I wouldn't say that. You know, daily it had a nice pop up yesterday. We're trading within the zone. BlackRock owned something crazy like 70 billion worth of Bitcoin. They just keep buying it. So yeah, I'm not, not sure. And yeah, like I'd said, Bitcoin, just be careful. It's pure hype. It's just pure hype, right? It's driven from, it's not like a, FX pair or a, stock where it's driven by true data. All right. Bitcoin is driven by how many buyers are there versus how many, sellers. What's the hype in the market? Okay, so it's just yeah, I don't like intraday trading it because I'd like to take obviously my first part or first few confluences of any trade that I enter. I'd like to obviously take those off, in a macro and a data point of view. I don't like to think, right, well, I heard a rumor that there was a guy that held for 15 years and he's out, but this guy's not spoken. You don't know who he is you know it's yeah it's that's what I kind of don't like about Bitcoin. The one thing that I always got told is once you see Bitcoin on a bus or in a tube, yeah, start to start to come out because that's been the time where it's its highest hype and then everyone's going to start to take their profits off the table. Right, last one here, Greg. The other thing I've found hard recently is the divergence between yields and dollar. Yeah, it's really, really hard. But obviously, it's not too bad. Like last week hasn't been too bad. Yields and dollar pretty much acted as is. If we're looking at them, in regards to obviously Friday, we just had a bit of a heavier, a heavier sell-off Monday of yields, but then obviously they pushed up harder, So I think at the moment, now that yields are trading up here, I do think that everything is all kind of relative, but obviously, yes, we did have it not last week, the week before, where it was a bit tricky. I'm not gonna lie to anyone here. It's the hardest week, or sorry, it's the hardest time to trade because there's so many different moving parts that can come in or that can change, or a speech can come out and totally change things round. It's always been hard, but it's never been this hard, So main thing is, like always, make sure everyone manages your risk, and obviously once you're happy, you come out. But yeah, just on a bit of a final note for everyone, we'll start obviously trading again tomorrow morning once markets open. Well, they're obviously open tonight, but obviously we're not going to be tempted to trade. We're going to stay away, and obviously let Asia kind of, paint the beginning picture of this week. But obviously, what I'm going to do for everyone in the inner circle, I'm going to do a boot camp. It'll be Monday, Tuesday, Wednesday, Thursday evening, completely, free. I'll just post the Zoom links in. It's going to be 8 p.m. And yeah, you guys can obviously hop on. We'll go through some different different scenarios of what you can do, and just try and keep everyone on the right track. So yeah, but no, I hope everyone has a great Sunday evening. And yeah, let's smash it. For anyone who's got any questions afterwards, drop the team message, and obviously they'll help you. So no, have a great evening, and yeah, we're gonna smash it, I am sure. Have a good one, guys. Have a good one.